Estée Lauder jumped after a strong quarter, but the rally came with a sharper restructuring message. The company beat adjusted earnings expectations with 91 cents per share against a 65 cents estimate, and revenue reached $3.71 billion. Shares climbed about 13% in premarket trading. The tension is that the same update also added thousands of planned job cuts. Read the opening through EL earnings and $3.71 billion revenue. The useful tension is whether margin proof turns the first signal into a durable development rather than a short-lived reaction. The confirmed earnings picture is better than expected. Revenue rose 5% from the prior year, organic net sales increased 2%, and fragrance was the standout category with 10% organic revenue growth. Mainland China grew 6% organically, while the company said its luxury fragrance brands helped drive the beat. Makeup, hair care, and skin care were much flatter. The context is anchored by luxury beauty. With 10% fragrance already in view, the next claim has to clear the threshold of segment breadth before it deserves more weight. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Estée Lauder is using cost cuts as the mechanism behind the margin story. Adjusted operating margin widened to 15% from 11.4% a year earlier, and gross margin improved to 76.4%. The company expanded its workforce reduction plan by another 3,000 positions, bringing the total expected cuts to 9,000 to 10,000 employees. That is the trade-off behind the stronger forecast. The working layer is margin plan. Its current signal, 15% margin, matters because mechanics decide whether a headline becomes usable infrastructure, tradable depth, or only a narrative. The operational proof is cut execution. Without that proof, margin plan remains a promising mechanism, but the stronger conclusion has to wait for evidence that the process works under pressure. The impact reaches employees, department store channels, investors, and luxury beauty brands. More than 70% of the additional job reductions are expected to hit department store personnel, which shows a shift toward digital platforms and specialty retail partners. For investors, the raised full-year adjusted EPS forecast of $2.35 to $2.45 is the cleaner near-term signal. The scope is defined by retail channels. The condition to track is 3,000 extra cuts, because that tells us whether the impact is concentrated, widening, or still waiting for a clearer response. The open question is whether the earnings beat is a durable turnaround or a cost-driven improvement that still needs stronger demand. Fragrance and China improved, but other segments did not show the same momentum. The company is also managing restructuring while dealing with consumer confidence, geopolitical risks, and possible business interruptions in the Middle East beyond May 2026. The evidence gap centers on recovery depth. The limitation, flat segments, keeps the analysis from overstating the outcome before sales breadth arrives. The uncertainty should be measured against sales breadth. If that signal appears, recovery depth becomes easier to judge. If it does not, the current limit around flat segments remains. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Estée Lauder, the next signal is whether the Beauty Reimagined plan keeps widening margins without relying only on cuts. Watch fragrance growth, China sales, digital and specialty retail traction, and whether the company can hit its upgraded EPS range. If sales momentum stays narrow, the market may treat the rally as a restructuring bounce instead of a full recovery. The closing read depends on fragrance growth. Pair that with $2.35 to $2.45, and the market or user impact becomes easier to judge without guessing ahead of the evidence. The final readout is not complete without $2.35 to $2.45. That condition links the next trigger to measurable progress, which is the difference between a headline reaction and a confirmed development.